Alright, so we're recorded now. So let's see, yeah, so obviously today we had that structural shift here on NASDAQ. Let's just see, okay, so we have not yet gotten there on ES. So far we have NASDAQ taking out the high while ES is lagging behind and has not quite done so yet. That doesn't mean that it's not going to, and we're absolutely going to get SMT, but just a possibility, just something to keep in the back of your head as we enter into tomorrow. Now, yeah, NVIDIA, man, that was a sweet one. We'll go over that trade as well, and oh, I'm just looking at some of these messages. Okay, cool. Yeah, we'll go into the NVIDIA. I actually kind of paper handed that a little bit. I think we tagged 900, and that's where it was. I'll show you guys where they rinsed me, but I had been in for a while, and earlier in the day, not that I was fighting Theta all that much. I did have next week contracts, but I was ready to take some off the table, and I actually threw it into or a good portion of it into end phase, and was able to close half of my positions right before close on that final hour ripper. So let's see. Oh, you sold at 900 too. Yeah. Yeah. Yep. So I'll show you guys that in a sec. But first, let's cover the silver bullet because Red Shirt had asked about it, and that's another one of those concepts that I think is just overcomplicated. They don't need to be as complicated as they kind of come off to be, right? You don't need to make a 20-minute stand about it or have this long, drawn-out conversation really regarding it. But ideally, for whatever time, I wish I knew. I don't know if ICT does, but he's not shared it. But why this setup would occur at the 10 a.m. to 11 a.m. Eastern time frame, and your second would be your 2 p.m. Eastern to 3 p.m. Eastern. So I'll type that out up here and just drop it. So hold on, so you guys can see. But 10 to 11 a.m. Eastern and 2 to 3 p.m. Eastern. Okay, so really with the silver bullet, the way that I approach it is, as you all know at this point, I don't really look to trade all that much prior to 10 a.m. Right? That morning volatility, sometimes it can be beautiful, and sometimes it is the opportunity for that kill zone. So never say never in terms of when I do end up taking those trades. But oftentimes, especially if we've just recently had data, or maybe we didn't have data, and 9:30 is really where that volatility is coming from. That kind of sets the stage for the day. So, the majority of the time I do sit out and just wait for that 10 a.m. silver bullet. And realistically, what we're looking for during that 10 to 11 a.m. time frame is just some sort of imbalance, breaker, liquidity being swept, right? We want some sort of PD array to set up into that 10 o'clock, so 10 to 11. It doesn't have to be formed in that 10 to 11, but we want it to tag it during that time frame, and more often than not, that turns out to be a pretty sweet trade. And today here's your silver bullet where you had this imbalance that was created off of data, right? And kind of waited for us just until 10:15, wicked into this 15-minute bullish fair value gap, and from there took off, right? So that's ideally what we're looking for. So we are looking for some sort of imbalance to get tagged during that 10 to 11 a.m. Eastern time frame, right? Now, in addition to that, there are certain times where you might say, oh, well, we're inside this big bearish imbalance right here, right? So that could deter you from taking it. But what I kind of said, not today but yesterday, was I was looking for a move at the very least up into this mark here at 64. That's 50%, right? And notice how the level of respect for that imbalance down here, right? And you can also remember what we talked about yesterday and how we built off that idea of, if we have multiple different higher time frames working their way down as a way to kind of create our bias, right? So for example, if we have a bullish weekly, we have a bullish daily, then we really wouldn't anticipate a bearish hourly to play out all that effectively, right? You know, again, the higher time frame trumps. At some point or another, we are going to get that shift, right? It happens, right? You know, it might not seem possible or like it's going to happen, but at one point or another, we will shift market structure and price will start to go down, right? So, of course, that is speculation, right? Now, by saying that, you know, like a lot of the geniuses on Twitter, you know, they'll be talking about, oh yeah, we're so extended, this, that, blah, 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 all of this nonsense, right? But at the end of the day, how many of these massive rips in this bullish run that we've had over the last, I don't even know what it is now. So mid-October, end of October to now, 6 months of this, and they're still trying to fight it. You know, it's crazy. I would, again, this just goes back to something that I've kind of based all of my ideas off of over the last couple of months, and it's just until I see that weekly imbalance, there's no reason for me to look lower, right? And look for prolonged periods of lower trades, right? Could you have made money on this move right here? Yes, of course you could have made money on this move right here. I'm not trying to say that you can't make money on that, but for a prolonged short, right? So let's say you ended up taking that, bang, great, I made money on that. And then let's say you even sold it near the bottom, right? And then you're looking for your next re-entry into that short and you're trying to short this, right? It doesn't necessarily really line up with our overall bias, right? I'm pretty neutral, but there's really nothing set in stone that, let's just say our weekly and our daily are bearish. At that point, I'd say to myself, okay, I'm expecting this hourly to catch and reject and move down towards lows. But you know, without those other higher time frames working together in the same type of direction, you know, I'm not really going to value that hourly setup all that much if it's going to be in the inverse direction of our overall trend that we're still inside of, despite anybody's trend line or moving average or anything like that. Market structure has not shifted on a weekly time frame, and it still has not shifted on a daily time frame at all. So, but again, having that higher time frame idea as to which direction is more likely for this silver bullet to play out, you know, and for example, it was to the upside today, right? So we ended up shifting market structure here. You know, another thing that you guys can look at as well is, I know it seems, you know, a little off, but if you are looking at, let's say you are looking at the indices, and that's, you know, tends to be what you trade, you could also look at the setups of some of the heavily weighted names in there. You know, even if it's just a few, especially the big tech names that have a pretty large weighting in there. You know, oftentimes they will give you a pretty good idea of, you know, overall direction. And Nvidia's setup was screaming for higher. You know, similarly, I mean, Apple really was the deal breaker in my opinion today. That really put us over the edge to give us that next leg up and to shift market structure back bullish. So really, I mean, everything that happened earlier on in the week is essentially erased, and now, you know, we're looking at potentially closing this week green, which seems crazy after what we got on Wednesday, right? So, but again, just to tie that all in together with, you know, our topic of discussion right now, that silver bullet is really, we're just looking for some sort of setup. And what I mean by setup is, again, an imbalance, a breaker, a liquidity sweep, you know, you name it. Any setup in that, using that type of idea or concept, that's really ideally what we're looking for during that time frame in order for us to ultimately, you know, look for wherever the drawn liquidity is. And this is what it was, 18,747, right? That was our swing high. That's where, you know, clearly at this point, what had to have happened, right? People had to have gone short, and if they went short here, their stop orders are setting right above here, right? And in order to drive price the way that it did, that's a pretty big move, right? So you can, you know, think about it as that's probably a pretty large pool of liquidity, right? And if the market's job is to go get liquidity, what is it going to do? It's going to run to a large pool of liquidity up there, which it did. So, so yeah, that's the silver bullet. I hope that kind of makes sense. It's just a specific time period in which, we would anticipate a trade to at least give us 20 handles. And, today we ended up getting over 200. It's just a part of it. I wasn't in NASDAQ for all of that, unfortunately, but I did scalp it. I made some money and turned my attention to NVIDIA because that setup was pretty good to me. So I'll come on over here and show you guys what I was looking at on the video. But so I noted that this low sweeping here was interesting, right? And the thing about this is, of course, on the weekly, NVIDIA has not had a discount retracement, right? I think that's fair to say. Even from this point, we haven't retraced into discount, right? So with that, what does that tell us, really? Like, I don't know how useful our weekly time frame is in terms of a trade idea, especially if you're using my model where you wouldn't really want to be trading this long until you get to the 283. But the difference is when I come down to the daily time frame, and while ultimately to me this is still bullish, no bearish imbalance has formed to the downside, right? That's usually my key or a necessity in order for me to feel confident looking for lower prices for a prolonged period of time. It applies here on NVIDIA too, not just futures, right? So no bearish imbalance was formed. We have that bullish volume imbalance and caught with the bodies. Look at the bodies respecting it, in addition to sweeping liquidity down here at that 833. And so far so good. But here's where the setup got where I started to key in on it. And I should in addition to that, I want to shout out two people. So Lance, he's in here, but he actually brought this to my attention the other day. I think it might have even been over the weekend, and he said, yo, check out SMCI. And I was like, okay. So I looked and I noticed that we had this bullish volume imbalance here, right? I actually took that trade yesterday afternoon, closed it before the end of the day, and I'm kicking myself because obviously we were going ballistic after that. But upon further review, I saw a setup that I thought was even better, and that turned out to be the NVIDIA daily. So if we were to take a look at this most recent price run, right, I'm not using the overarching weekly range that I had over here. I'm using that most recent price run to take out this high, which was that low, to that high. Here's your discount retracement, bounce, not quite taking out this high. What did that leave behind? Relative equal highs, right? So if it's going to leave highs like this, right, that means whatever stop price here was on a time frame that was lower than the daily time frame, right? Something that I think we blow through no problem in our next attempt up at that level, which so far so good, right? Now, if you were to see the rejection from this point, okay, great. We're moving down lower, right? We did not have enough juice or liquidity to get up through this level. So what is that telling us? Well, it's likely that we have to come back down here and grab some liquidity, which we did. So we turtle soup that low in addition to this low as well right here, and had a nice little run up from that point. So what I felt like was a giveaway at this point was that bullish volume imbalance right there. So I'm bullish on the daily, right? So from this point, and this is a breaker, I should change the color of this. Oops, right here. Boom. Okay. Low, high, lower low, a break above this candle. We can anticipate that level acting as a support level moving forward, right? And my model would complete on NVIDIA at 974. But anyways, I only have until next week. Could NVIDIA do it? Sure, but just not a comfortable trade for me at that point. But anyways, so at the point that I took this long, it was really right around this area here where we're pretty stagnant, but this is what I liked about it. So if you notice, here was a bearish fair value gap right there, and that's where price rejected the first time. The thing about this setup that I kind of really liked, like if this was our hourly range, you'll notice how price got up into 50% or discount, right? And from that point, we did not complete my model down through those lows, okay? So for us to put our foot in the ground like this, knowing that our daily and our weekly is bullish, I felt comfortable looking for that market structure shift, which ultimately we get here at 876 and beyond, right? Turned out to be an awesome trade, and this is or I got out of it at about 900. So I didn't quite get the final couple bucks on this. And if we were to go down to the 15-minute time frame, you will see, hold on, let me remove this right now. Well, our range is pretty massive at this point anyways, but I ran into a stop out. Where was it? It was right around 900. So I believe it was this 15-minute bearish fair value gap, and it had to be just right around 2 o'clock. Yeah, so that wick got me right here. So wicks give you the heart attack, bodies tell you the story. The thing that killed me about this one right here on this candle was, as you could see, that green, it's a 5-minute fair value gap, and we ended up closing below it on there. So that was my stop. Took my stop, when in reality I probably should have had my stop here, but then at that situation I'm giving back $7 of gains on a runner that I probably didn't want to anyway, and ultimately we clean it up and continue to run higher from that point. But just a really an awesome trade. Geez, I mean, from down here at whatever the entry was, 870, we took it about $30. But yeah, awesome trade. But yeah, and Christina also had brought up SMCI, so I had that semi idea in mind, and I saw the NVIDIA setup, and I thought to myself, after the fact, after trading SMCI, I was looking, do I get back into SMCI? And then I just started to click around on some of these names, and I noticed that NVIDIA setup on this daily was primed and looked great. So ultimately, don't know if it's going to happen, but if I get another opportunity at 8888, I'm going to take it. It'll be a pretty wide stop loss, but on this one, I'm probably going to grab much more time on it to let it develop and ultimately look for that 974 relative equal highs to get swept up and to complete my model there. So what do you think about NVIDIA in the hourly after today? Yeah, sure. So if we go back over to the hourly now on NVIDIA here, you will notice that we do have an hourly bearish fair value gap. To me, the draw is still there, 922. So here's I guess the big question would be, see that bullish fair value gap we just made there? So far so good. We came down and got it after hours. That's at 5 o'clock. That low wick right there into the hourly bullish fair value gap, right? So I guess as a basis for a trade at this point, I would just use this. So if we don't hold this, then at that point I say to myself, all right, let's remap this range and let's just get an idea of this specific price run, right? So what was the run that took out this high? And you'll notice that at this point we have that low too. Didn't quite take out the high there, but we also did not retrace into discount. Therefore, to me, the range is not set, and I have something like this. So at that point, you can get a pretty substantial retracement. But I don't think that's going to be the case, to be honest with you. I think from this point, you also have another, hourly makeshift breaker, low, high, lower low, ultimately more of a down move. But once we take out this high, we can use this candle as support level moving forward. And while it's rather large, to me, the drawn liquidity is higher still. I would love a chance to get a retracement into the daily breaker, but again, I don't really think that's going to happen. I think what 922 is our likely next spot, and then from that point, you have the rest of this imbalance to fill. You have another little swing high here at 936, and then from there, you're basically at those highs again. So yeah, I think it's pretty bullish. This is pretty extended, but at the same time, and what do I mean by extended, right? People say extended and it just sounds silly. What I'm saying by saying extended is, with the range this big, right, we go into everything and just have an understanding of the range and how a big range can lead to big retracements, right? So at that point, how tradable is that retracement, right? That's a question I'm just try and ask myself, because one bearish fair value gap here, and then I'm thinking we're going to 871, right? So that's a massive move. Like if you were to short that, that's as big as the long that we caught today, right? So that's just the way I look at it. And of course, really in any situation, I would prefer to keep my risk minimal in these situations here. But I think using something as simple as this hourly imbalance, you wouldn't really want it to mitigate or go below it, I guess you could say too. Because until then, if you were to look, like we don't really have an imbalance other than that bullish breaker, which is in premium of our range, until here down at 890. So I got to be honest, I think we're moving higher still on NVIDIA, but I guess we're gonna find out. So yeah, that was just that one setup that I saw today in the trade. What's 888? Yeah, so that 888 is the daily bullish breaker. So I will here. So on the daily, here it is. Whoops. Here's your daily breaker. So your low, high, lower low, break above. So I have an alert just set for that. Honestly, don't really think that's going to get hit and give me another chance at this at the moment. We did sweep that 906, and that was what I was calling for 30 points there. It seems like a pipe dream, but obviously things got crazy today. So whether that 906 happened tomorrow, early next week, or today, that was just the difficult part. Like, when was it going to happen? It wasn't where it was going. It gets to a point where you feel pretty good about the direction of something, and the time is always the hardest component. But if you have enough money to take something far out, I think it takes a lot of the stress out of it. But yeah, that was the NVIDIA trade that I took. I'll show you guys the end phase. I put that one in the chat as well. But here's what I was looking at just from top down, because again, there's certain names that I'm really not even looking at. They can be bullish on the smaller time frame, but if it doesn't meet the higher time frame criteria for me to be interested in it, I tend to avoid it, because there are names right now that are pretty bullish on the higher time frame, and then when you get that to line up on the hourly, you just feel much more confident about taking those types of trades. So so if you were just to take a look at this end phase, obviously it's been just a cluster for a while here. Notably low, high, lower low, bullish breaker. Price gets up through, retraces back down to the bottom of the breaker, sets up another with relative equal highs above, and this is on the weekly time frame, I should add. Here's a bullish fair value gap. While we do go below it, do not close below or disconnect from that level, and still respecting where the trade at this point would go, quote unquote, bad, right, below the low of the candle that created that imbalance. And ultimately from this point, I'm still looking for higher. I think we go to 139.65. It's just taking time. That's the difficult part. So how is this, how tradable is something like this? Now if we're to go over to the daily on end phase, very similarly, here's your relative equal highs. You'll notice last week, actually, I in our live, if you were to go back into the live that we spoke last time, we've tagged every one of these daily imbalances at the very least at this point. And that's what was pretty encouraging to me moving forward here. Now, going down to the hourly, this is where I started to see this setup as one that I would be pretty interested in, right? So I'm looking over here and I'm saying to myself, okay, well, we got into this bearish imbalance here. Great, okay. We didn't take out that low, right? So we're still hovering inside what would technically be a bearish range at this point. But just like we saw on NVIDIA not setting that low and completing the model, we actually put our foot in the ground and have not done so yet, right? But with all that being said, in this most recent price run, you have your low to your high. Here's your discount retracement. You actually got a little turtle soup action sweeping that low, so that was pretty enticing for me. But here's where it all kind of came together for me, and I said to myself, because even when I'm looking at that hourly, I don't really have an imbalance to trade off there. So what gives, what could I use at that point. But if you were to go down into a smaller time frame, you'll notice that you do have this 15-minute imbalance, and off that second tap, that's where I got it and wrote it up. So let me just see the final number on it right now. So yeah, I just took contracts for next Friday, 125s, anticipating a completion of my model on this, hourly / 15-minute time frame, up to 124.78 would be beautiful. And still, so far so good. Now that we took that high, I mean, even if you were to look at it from a little bit of a smaller pinch in time, we did not get down here into discount just yet. Not sure if we do. We could just run this straight up and over, and that would be ideal for me. Open up before the market opens to a gap and stack, but it's just, I guess, something that I've become pretty accustomed to doing is just not really holding all that much overnight. And if I do hold something overnight, I gotta have a good chunk of time on it, so that a gap down or anything like that wouldn't completely smoke me. I have a few things that are open, but I have like multiple months on them, so I'm not all that worried about potential little gaps here and there. But something that I have expiring next week, I kind of want this move to happen quickly. You might ask, why would I trade on a bit of a shorter time duration on something like this? And ultimately I'm kind of trading this. Yes, I have the overarching idea that price can go to 139.65, and I have a ton of end phase shares, but the reason why I decided to trade this using a smaller horizon in terms of what my contract expiration would be is because really at this point I'm really just looking for that 124.78. This would be even better, 127.57, but I'm pretty realistic. If price were to get up and sweep this high, it wouldn't shock me for a little bit of a retracement at that point. But knowing that I'm going into it trading a shorter dated contract, I'm not looking for 139 by the end of next week. That's a 18-point move. Can it happen? Sure, it's happened before. You've gotten massive candles on this thing, but to me, anticipating something like that, or even, for example, trying to anticipate a move that we got on NASDAQ, when was it? It was the other, was it this? It might have been this, where it was like, it turned out to be like a 500-point down day or something like that. Or we were up 200 and ended up losing 300 on the day. Like, those are very hard to anticipate, especially beyond previous sell side liquidity. Like that's very tough to anticipate. And if you are taking more time on the contract and you're looking for a higher target, maybe a weekly swing target or a daily swing target, you have much more flexibility. If I'm just looking at the next little run up, which is about $4 higher, I have quite a few contracts on that. If it were to get to that point, I'd be cool with it, and I could always look to re-enter. But each trade kind of sets up a different game plan, in that I'm essentially trading this using a smaller time frame, so I felt that I can go a little closer in time. Ultimately, if it were to not do what I want it to do and go below this 117, I'm done. I'm out. But I'm glad that I was able to take a couple contracts off to close out the day, so that my risk is pretty limited here. But ultimately, I do think I'll be in the money with these. So let's see. Do you take profit and scale out on the way up to your target? Yeah. So a lot of the time now, I've noticed that my profit taking is usually coming at the end of the day, like before the overnight session, because again, especially stuff with shorter time frame, I don't really want to hold it all that long. But here's the thing, it's easy for me to say I'm looking for 124.78, and then let's say we gap to that tomorrow morning, right? I'm probably not going to close all mine, right? Maybe I'll leave a few, and I guess that would be the ideal of scaling out. I think the scale thing really, really depends on what your specific plan for the trade was. For example, on Roblox, the first swing or the first target that I had was that weekly I'm sorry, daily imbalance on it here, and I'll show you. So naturally, I'm gonna take some off, just precautionary, of course, right? But from this point, this is not to say that anything with the overarching trade on Roblox is dead, right? And this is why, everybody wants to be a swing trader. Oh, it's good, it's great, it's this, it's that. How do you react to a red day? Because if you're holding this thing for a couple months, you're probably going to get a couple red days mixed in there. Can you stomach that, right? So, are a couple red days going to spook you out of the trade, even though the setup is completely still valid and everything's going, nothing has changed structurally, right? So just by looking at Roblox, right, we took out that swing high, filled up this imbalance, and we were tracing into this bullish volume imbalance right here. If we were just to take our low to our high of our most recent run, right, 50% would be getting us down into this imbalance here, right? So now that I scaled a few contracts off here, if price is to retrace down into discount, that's not something I'd be opposed to. You know what I mean? So that would be an idea in itself, because right, by us rejecting here, right, and again, we're looking at this whole setup, really it really culminates from this, your monthly. This is a monthly setup, right? This can take a lot of time. So when that kind of situation shakes out, right, I'm not overly aggressive taking my profits at hourly swing highs or anything like that, but I will use a higher time frame, whether it's a weekly target or whether it's a daily target, as a way to just take a couple bucks off the table. That way I have more powder for when I do get that next retracement into discount, so I can look for another opportunity, right? That run up that we had on Roblox yesterday was insane, or really it was like the last couple of days, I think. So just check this. Haha, there it is. But if we were just to take a look, like, hold on, let me just remove these, but these are previous bearish levels that were absolutely shredded through. Now if we look, what was the price run to take out numerous sets of highs really here, and simply put, it's from that low to here, no discount retracement. Okay, where is discount? Lower, right? It's still lower, right? And while one argument can be made here, and if we were to turn around and shred it, okay, I still have skin in the game, so I'm not going to be all that upset. But we haven't created a bearish imbalance to the downside here on an hourly time frame, right? So until I see that hourly imbalance, I don't feel all that great. Oh wait, actually no, we did. Okay, here it is. So yeah, I'm anticipating this going down into discount, and then from there, nothing has changed structurally. I'm not looking at this any differently. All I'm thinking about is, okay, the X amount of contracts that I took off near the top, I didn't catch the top, but near the top, I can reuse that money, even have some on the side, for a discount retracement. This is a longer term swing setup. I'm going to actively manage it, of course, but I'm not taking full positions off, because again, could we put our foot in the ground here and just take off tomorrow? Sure, right? We can use that bearish imbalance as an idea that price is likely to retrace down into discount, but we're still very bullish on basically every higher time frame that we look at here. So that's just the overall idea that I have for Roblox. So that's the thing, everybody wants to be a swing trader, and then you have a couple red days mixed in, even though there's no structural change to whatever your trade is, and people can't handle it, and then they start complaining and they get all in their head and they don't even look for another potential trade opportunity. I don't know what to tell you there. But yeah, structurally, if Roblox is to lose 36.80, that would not be ideal. Let's just see where that is. 36.80 would be somewhere in this vicinity, but realistically, if we're looking at it from the higher time frame, we notice from this point we don't have any higher time frame imbalance here, and that would essentially be relative equal lows. Why wouldn't this be relative equal lows? Because that last low that we made took out the lows from the previous 2 weeks. So double the pool of weekly liquidity swept, and that's what kind of sent this sucker up higher. But But yeah, so that's just another setup, and again, this is all just for the overall idea that at some point it's probably good to have an idea of what kind of trading you want to do, right? So again, even if you're day trading end phase, for example, do you think that it's important to know what your weekly and what your daily setup is looking like? Right? To me, it is very important, right? I'm not just going to buy stuff that might look good on the hourly, but your hourly might look all right when your daily and your weekly time frame is bearish and you're trying to long in an hourly. To me, going back to what we talked about last night, that is a lower probability trade. That's not something I really want to take, right? And if you're trading futures, because I know a lot of you trade futures in here, you might not have that luxury of having the ability to have your weekly, daily, hourly, all working in the same way, right? It's just, like I said, I said it yesterday, or maybe it was 2 days ago. Weekly, I'm fuzzy. I have no new information, right? There's no imbalances that formed in either direction. At this point, I'm pretty neutral, right? Here's our daily. Our structure is bullish, but if we were to sweep at whatever the number was, then, I might start thinking differently. But you don't have that luxury on futures, and that's why when you're looking at those smaller time frame setups, to me it's nice to kind of pick them out and not look to hold them. And I don't swing them anyway, so it's not a big deal. But if you're trying to be a swing trader and you're trading good setups off the weekly, you gotta be ready for some red candles mixed in. It's not going up in your direction the entire time. It's not how it works. You're especially if you're trading off a weekly time frame, you get contracted a couple months out. When have you ever seen a daily chart where you have green candles every single time, or if you're shorting something, red candles all the way down, right? Unless you're looking at an AMC chart, you're gonna see different coloration in there. Not every day is a banger day, and that's just something that you gotta either become okay with or stop swing trading, right? All right. So, does anybody have any questions or anything to build off of? It also doesn't have to be directly what we were talking about, but I'll just look in the questions tab and see if we had any. Let me just get all my charts back. Yeah, the AMC crowd is down bad. So, let me shift this up. So this imbalance, I'm not looking at that as anything at this point. Let me just go over to the questions tab and see if we got any new ones. No new questions over here. Nobody's got any. All right, well, if anybody,
Mando,
yo, I heard somebody. Yo, what's up, man?
what do you think of the $1 risk on Johnson and Johnson? Now that we've seen the meltdown from 160, now we're sitting at 148. I believe is the close. Yeah,
Whoa.
150.77 is where I wanted it to break or sleep that low. Now we're sitting in the monthly bullish imbalance created between the order block and the bearish candle and the bullish candle for the little order block to the left. Yep. So I'm expecting. Yeah, I'm looking at that. So I basically just did body low to body low for that, and basically it would net you about $1 risk if you were interested in that.
So you're looking for. Hold on, I'm just looking at this. I'm thinking we might sweep it again.
Maybe even lower. Yeah.
let's just see that last run up. Okay, go from that run. No. Oh shoot, dude. So we got into discount on the monthly, ran up for highs, and then
Mm-hmm.
actually shifted structurally. So at this point, um, price run that took out that low here was here. These are relative equal highs.
Yep.
Retracing into here, melter, and then from this point, hold on. Yeah, no monthly imbalance. Let's see the weekly. Weekly, oh, you have a cluster here on the weekly, and you did tag this. So you're saying risk $1 to the downside?
Yeah. Well, so I
Oh,
actually
towards
have
the
it.
lows,
So
right?
on the monthly, like again, I put the if you go back to the monthly, I put low of the bearish candle to low of the bullish candle on the monthly.
Oh, okay.
Yeah,
So right here.
yeah, negating the wicks. So I just didn't even look at the wicks. I was just looking at
Oh,
the
gotcha.
yeah, right there. That's it.
Oh, so you would risk that.
I would
What is
just
that?
I would risk that. It would be like 80 cents.
Oh, yeah. I mean, that's not a crazy risk for sure. I'm not so sure. I think we might sweep that, but
Yeah.
um, let's see. We did tag this imbalance here. This kind of looks like Tesla, where it got into a previously beat up imbalance, but
Mhm.
um, hmm. Yeah, if I had a gun to my head, I'd say probably sweep those lows, and then from there I'd look higher. But I don't know.
Yeah.
I don't know
Glad
about this one.
glad I
There
saw
was
the
another
open.
one. You had UNH too, right? UNH was another one that you're.
Yeah. So UNH is beautiful, but I this one reports Tuesday morning, so I'm actually looking to buy either calendar swing, bullish calendar swing, or call swing, or a bullish all vertical. I haven't figured out which one I want yet, but ultimately that's what I'm looking at.
Damn.
Yep.
Swept the
And
equal lows. We got
yeah,
this. I wonder if we get down into here on the monthly. That's
yeah, it'd be like
436.
436. Yeah, exactly.
About
So
$5
even
lower. That would be golden.
even
I'm
still though,
getting
like
that.
I'm like looking micro wise, like $5 risk for 100% or no, sorry, the 100 point 20% equity upside is a lot.
Yeah, no, this is
I
a big. This could be a
I would
banger, dude.
go to the weekly. So the monthly is sexy, but the weekly is really where I was identifying this kind of setup
Those equal
because
lows.
yeah. It tagged all of those equal lows. Remember, as you said, look left. So yeah,
Yeah.
mark that out first, and then go up a little bit, and then where all those lows cluster.
Yeah.
Uh, is it? Yeah, that's right there. Yeah,
Yeah.
yeah,
Yeah, we just swept that.
yeah.
And this is the
So
weekly, so even if it does drive a little lower, we're going to use that weekly. This could still end lower, and we could still deem it a liquidity sweep based on next week's candle. So,
yeah,
um,
yeah.
I think honestly, ideally for UNH, I'd kind of prefer us to get down here either tomorrow or early next week, and then start to get it going
Yeah.
to the upside. But yeah, I think I mean, if you're if you're looking to swing this is actually another question that I got recently. When you're looking at something like this, and you might say to yourself, "Oh shoot, I'm early, right?" But if you're swinging this on a longer, time horizon, right? However long you plan on holding something like that for, if you're your entry is a couple bucks early in the long run. If price goes to where you want it to go, is it really all that bad, right? Ideally, you wouldn't be entering that trade if the risk was all too big. If again, where does the trade, you know, really go bad in this situation? And this is a tricky one because you have back-to-back bullish fair value gaps. So you have this one where the trade would technically go bad off this initial imbalance here, and right below that you have another bullish imbalance. So that could be too much of a range. I get that totally. But what's your upside risk in the situation where you're correct, and I think you might be correct on something like this. That's is being early all that bad, right? If you're early and you're trading on a 5 or 15 minute, or trading weekly or 0 DT contracts, yeah, that's a problem. But if you're looking at something from a higher time frame, right? Think about the idea that ICT talks about, is that like that smart money accumulation, or the buy model, in a sense, right? This doesn't happen overnight, or just the idea of sell models, right? Where how many have we seen of these insiders or CEOs selling their company stock, right? And notice how the reaction is not always immediate, right? It takes a lot of time for that to kind of work itself out, but ultimately, that's the overall direction that they think things are going, and um, it's not going to just happen immediately.
Yeah,
The other,
and
the other,
the other thing you're looking at too is you're looking at 2 years of sideways price action here. This whole little cluster that you
Yep.
have here. And then, if I may, if you can't, like Mando was talking about before, if you can't stomach big losses, then, I'd probably, and you're interested in something like this, then I'd probably take a stock position and not even risk the options play. And the reason why I would say that is because you're talking about something that's been trading in a range for 2 years. So, like, you can't expect that to just, next week be, at the top of his range. That's not likely. Um, with that said, though, I was actually thinking, and because I know, Meta, you don't really cover this too often, I was actually thinking about doing a calendar spread and actually taking something where you have like a January 2025 call, and then short against a June 24 call. And that way you're basically at that point, I think, spending about $2,400 per lot of contracts. But essentially, you still own $1,000 or 100 shares that are in the lot of that options contract. You're just
Right.
you're on the hook for $2,400 for owning 100 shares, as opposed to you know putting in $44,000. It's a lot better
Right.
risk reward.
Right.
uh, sure, you're not going to get the maximum upside, but then think about it like you're basically taking it out as like a lease, that you lease the stock until expiration date, which would be about 6 months away. Or you can take a 2026 leap and short against the 2025 leap if you really wanted to, like, think that the trade setup's going to take longer. You can really just define your
Yeah.
risk by minimizing how much you actually have to put into a stock, as opposed to just like straight long ball buying calls. I actually looked at
No,
the
it's true.
premiums as well. If you sell the $440 put premium, you would collect about $1,200 or about $1,600. So essentially, you would put about $44,000 down, but then you would collect $1,600 or $1,200, depending on which monthly expiration you take, in order to take this trade. So in that case, you would have the rights, or you would essentially buy shares at expiration if it was at or below that strike price. But you would also get $1,200 for buying. So, like, let's say it's under 440, by the expiration date, you would buy the shares for $440, but then you would collect $1,200 worth of premium. So you would have paid, 4,000, 42,000, $800 instead of spending $44,000 for shares.
Right. It's a big difference. I know. I'm just for reference also. I just pulled it up. The January 25, right? So one contract of the January 2025 monthly contract. I just I just picked the 500 strike, right? That's 2 grand a pop, right? So think about it. In order to, for you to, if you were to buy stock, right? Instead, you're basically getting what, I don't know. Let's say it's 450, right? You're getting 4 shares, right? Maybe 4.5 for depending on what your exact entry is. 4.5 shares for what it would be for that strike. Of course, you're not fighting the time, but I'm looking at what the at the money strike is for that specific target. So let's say you were to get that 500 hit, all of those relative equal highs up here, right? If you were to get that 500 strike, you can look at it that contract could be worth 46.25, right? So that would be a $2,600 gain on a 2,000 down. That's I look at it that way too when I try and decipher, is it worth it to go with shares? Is it worth it to go with the options contract? Like, which one would make more sense to me in that situation? It's just I don't know. There's definitely numerous different ways to look at these specific things. But all right, yeah. So let's move on. So yeah, I'm gonna set an alert here for UNH. This is one that we've been eyeing for a while, knowing that we had relative equal lows. We were eyeing those relative equal lows since like here, if I'm not mistaken, KD, or maybe it was even that rejection here. I'm not sure. I forget, but
Yeah, a couple of
could
like
it have
five.
been a short for us?
Yeah,
Yeah, but here's the thing. Even a short setup that's happening in, when the rest of the market's going higher, it's just so hard for me to pull the trigger on that, for better or for worse, right? That would have been a 6 short. But, if the market in as a whole, and I know, healthcare sector might be a little different than what tech would be, and I get all of that, but it's just hard for me when there's strength elsewhere for me to look in the inverse direction of the overall market. Just, to me, based on, I think there's a higher ceiling to my longs on certain tech names versus what my potential short gain could have been on. That's it's just kind of a way I think about it. I'm not sure. Could be right, could be wrong. Just again something that I guess through personal experience, I kind of got into my head. But let's move on because I'm gonna head out here in a few minutes. How to decide if it's going to retrace or keep running? Sure. So when we take out buy side liquidity. If price sweeps a high, right? Let's use NVIDIA's hourly for an example. Okay. So and even during the day today when I was in this, I had said, like, once we sweep that 890, whatever it was, this is a tad off, it's 889, whatever the number was, I wanted to see, does price either reach above and sweep and pull back down below it? If that's the case, I'm anticipating some sort of a retracement, right? On the flip side of that, if price makes an imbalance up through previous liquidity, which here's your bullish fair value gap right here, then I feel pretty good about staying in it, right? And simply put, that's just how I kind of manage, especially when I'm in something, right? I'm not buying to long this, right? I'm too late. I missed it. I'll wait for it to retrace at another time. But if I'm in it and I want to squeeze every last drop out of it, and let's say it's a situation where my model completes, then I'm going to allow that candle to kind of shake out. I'm cool if it does sweep the high and come back down and it takes me out with the stop loss. I still won that trade. I probably made a decent amount of money on that trade. But I want to see if it gives you that next leg higher to go chase the next pool of liquidity, which in this situation it was here. It was a headache to get there. It really exploded this last hour right here, and I was out prior to that. There was one nasty wick on a 15, but I was pretty tight with it, and the percent gain that I had was already enough for me to feel pretty good about it. So a lot of factors, but I hope that helped answer that question there, Joe. Red shirt, how long have you been doing this? Well, I guess that's a pretty loaded question, actually. So how long have I been doing it at this capacity where it's like every single day I'm looking at stuff, I'm trying to make moves, I'm, analyzing things to the extent that I'm analyzing them. That really started to pick up a lot. I guess you could say really like just before COVID started. So just a quick rundown. I had been interested in the market since about 2018. right? I had an idea of what it was. So my senior seminar in college, we did this like stock market game. You would have to pick. It's just so funny now because I don't believe in any of this shit. But it's like we had to go back, research companies, and then say we wanted to long this. And by the end of the quarter or the semester in college, we would see whoever did the best. And my group, we won. We crushed it on. I don't even know what it was, but we won that. And I was like, oh, this is cool. And then I get to working, and at the time, this is while I was in grad school, and I'm working as a teacher's assistant, and I was working in a special ed program. It was hard. It sucked. And I was getting my ass beat like every day by these kids. So I was like, okay, I can't do this forever. I got to figure out a way to like maybe trim some years off for retirement. So I started to just like invest, and I didn't have a lot of money, but I was just, throwing some money in here and there, and, just doing what everybody thought, this was about. Oh, well, I'll look for a company. Maybe I'll find a gem, I'll buy like 1,000 shares of, a $2 stock. Maybe it'll go bananas, like all this stuff and whatever. COVID started. I had a lot more free time. I was doing all my work from the computer. So I said, you know what? I'm going to just like start watching this all day. And then I didn't realize that like so many people were interested in this, like on Twitter. I know Reddit was a big one. I never really used Reddit, but I was using that off the personal account. And then I said, all right, now I got to ask some of these people questions, see if I can like learn something. So I made up the Mando account, and I figured, if I have like an actual trading account, maybe I'll get some more answers from these, quote unquote geniuses. And obviously not many of them answered, but that's okay. But then I started to just post my own analysis and got bigger and better like that. But I never really had an idea that it could get to this scale where it's like, you can take trades like, really anytime you want it. But everything that I was looking at was much more of a long-term perspective prior to COVID. And, COVID, even when I started with COVID, I dropped in a bunch of money when everything, shit the bed. And then, lucky for me, everything went up really fast. So those swing accounts turned into, okay, I'm going to take profits and, learn how to trade. So, but it took me a while to get like consistent at it and feel utmost confidence. That's why, nobody wants to hear it, and they say it to a lot of people, especially when I do like like the mentorship stuff. It's like everybody wants to make money right away. I get it, but it is hard, and adding in that pressure of trying to trade and make money while you're learning something is just going to make it 10 times harder. So if you were able to just give it a little bit of time and actually understand it prior to entering, or maybe just do some paper trading or something like that. But what difference does it make if you're trading with real funds versus paper funds if you can't win on a fake account anyways? It doesn't matter, right? So why add that added layer of stress while you're trying to learn a skill that once you acquire this skill, you'll have this skill forever? They're not changing the algorithm. It's not gone. You can go back on NASDAQ or SPY all the way back to its inception, and you'll see these concepts still work. It's not going to change. So why rush the process when you don't need to?
The two biggest reasons why people lose money, long-term study from Fidelity, is they need the money to finance something else in their life. So they sell all their stock, never go back into the market. They lose a bunch of money because they didn't keep invested, and those investments didn't long-term gain. Or they, um, the second reason is, so take their money out, or oh yeah, the other one is they have too much pressure to perform, and because they have too much pressure to perform, they get scared and they shit the bed basically. So as long as you can not do those two things, learn what you're doing, and you're playing with money that you are completely okay with and don't need per se, you guys are gonna do completely fine.
Takes time. It's an acquired skill. And how long did it take you to get good at it? I think it was good versus consistent is two very different things in my opinion. So I thought I was great. If you go back and read my tweets in 2020 and 2021 when I was absolutely crushing it, and I was doing really well. You know, I thought I was the best. And then I'm not saying because the market went down. Like don't get it twisted. Like I knew how to trade options and stuff. My problem was I would hit these bangers, huge trades, but on the flip side of that, I had so many of these SPX 0DT lottos just go to zero. And if you do that over a prolonged period of time, you're probably not going to survive. So, what really helped me was when everything tanked for COVID, I came in with a pretty substantial amount of money. At that point, I've been working full time for 2 years, and I put a lot of it into a lot of these names. For example, we had CCIV, which turned into Lucid. That was insane. We had one that was, I don't even know if it's listed anymore. It was PIC. It was a SPAC that turned into XL Fleet. My biggest and my best one, my first one actually, was El Dorado Casinos, or Resorts and Casinos. Turns out Caesars bought it, but I bought that at like $9. It turned around up to 81 in just a few short months, and I had a lot of that. So that was they really set me up nicely moving forward. I had another one, actually. How I met Milski was through LCA, which turned into Golden Nugget, which also got bought. But that was the one where we met each other and we were talking about that. That was back in 2020. But the list of them was so long, but it was just a different style of trading. So that when I first went and made that transition to options trading, it was great. It went well. But the problem was I didn't have that model that I could repeat over and over again. And that turned out to be a problem. There was a point where I was just like, KD can attest to this, Ryan as well, and Ivan. We used to all be in a group chat. It used to be about 6 of us who just trade all the time together. I got to a point where I was like, I'm done. I'm not doing this anymore. These swings in emotion are just way too bad for me. Sure, I'm good at picking some winners, but the losers, when they just continuously hit over and over again, like, this is just, it's nonsense, and I can't take this emotional roller coaster ride, right? And at this point, I was still like, I was in the green. I was able to do this full time, so it was like I was still okay. It was just the mentally, it was just killing me. But then Ryan said, "Yo, check out all these concepts." So I started to do some study on this, and Ryan as well. We put in so much time into watching these videos, just trying to learn inside inside traction over and over again. And then finally, I was able to kind of put together an idea of how I wanted to trade and really meet certain criteria for it. And once I put together that model and started working it over and over again, now all of my trades don't come from that model. But at first, I think it was so crucial for me to get to a point where I felt good about one model setting up and looking for those trades, and only looking for those trades. You don't have to use my model. You can kind of create your own. And if you're struggling and you're saying to yourself, "Yo, I really see breakers well, but I'm trying to find a way that I can like kind of put it together and make some sort of," hit me up. I'll look into something. We create your own little thing and see if you can back test it and make it work. As a part of like the mentorship thing that I've been doing for a while now. It's like that's the final thing. It's to create some sort of model, not just mine. You don't have to use mine. Just as long as you have something like that, I'm telling you, you are going to just feel so much better about yourself, because you know that you have that setup that you've put in time and effort to go over at night. Oh look, maybe I didn't see it, but this completed my model today. Excellent. That's why you notice, like, I don't even, I post them every now and then, but I don't post them like every second I see one of my an instance where my model completes. It's like, that it just happens so frequently that I'm not like feeling a need to post them every 2 seconds. But we can go through 10 things, and I'm sure that we can find them, multiple occurrences where it's happened today. But that's the most important thing. Find a singular setup, and then from there you can build off, right? You can start doing other things, right? So for example, if you like the London kill zone, why not create some sort of model around surrounding that, right? I use that as a directional bias, and then I add in my model, and if it meets the criteria, now I have double the confidence in whatever trade I'm going to have from that point. Silver bullet, you could just trade silver bullet, 10 a.m. to 11, 2 p.m. to 3 p.m. That's it. But let's see. Still have TTD on your radar? Yeah, TTD is awesome. So we went over this one a little bit yesterday, but I'll just show you where we're at. Yep. So pretty solid. We did sweep last week slow, if I'm not mistaken. Yeah, I still have shares of this. So 84.11, 84.12. We took liquidity by 1 cent. Yep. So 94. Here we come. So I took shares on this just because I had I don't want to say too many, but I had quite a few contracts of a few names, Roblox specifically, that I wanted to focus most of my attention there. But I probably have way too many open stock positions as well. If I just like were to go down the list, like, um, let's see, I have Tesla shares, I have Enphase shares, I have Mara shares, I have Upstart shares. I still have my ARM long. Um, I don't have as much as I would like. It was one of my lesser positions, but the Roblox contracts that I had were pretty pretty substantial by my standards. So um, then we had I have AI, very minimal after that last run up. I did trim. But Oxy, I have Oxy shares. I have Robinhood shares. I have SoFi shares. Palantir shares. Baidu, that piece of crap, I have shares in that too. I have Palo Alto. I have contracts of that actually. Um, what else? I mean, that's kind of it. So I do carry a lot, but the stuff that for example, like I didn't end up getting it. I should have. But for example, like Snowflake, where it's my model, but could take a lot of time to get up to that 237, right? So with that being said, I'd rather not fight the clock on something like that, right? I should have learned my lesson with that after Palo Alto. Right? It's very similar. I have the cons. I still think it's going to work out just fine. It's just like it takes forever, especially when it's a weekly setup. So, um, but that's that. I see two people typing, and then I'm going to shut it down, but I'm going to stop the recording right now.